Behind closed doors, the Federal Reserve is preparing to run U.S. dollars to XRP, and no one's allowed to talk about it. The most powerful financial institution on Earth is quietly plugging XRP into the plumbing of the dollar and pretending it's not happening. They buried it so deep in technical jargon, no one noticed the dollar's new engine just went live. There are no headlines, no press conferences, no sudden policy shift. Instead, they're using phrases like neutral settlement asset, interbank liquidity rails, and tokenized bridge protocols. But when you trace the architecture, decode the terminology, and follow the partnerships, all roads lead to the same place. XRP is being integrated into the core of the U.S. financial system, and they're doing it without ever saying its name. Here's how it's happening. In 2023, the Federal Reserve launched FedNow, a so-called instant payment system designed to modernize the U.S. financial network. But there's one problem. FedNow doesn't move money. It only moves messages. If two banks don't have pre-funded accounts between them, nothing settles. The payment fails. And that's why the Fed is quietly testing a new layer behind the scenes, one that provides real-time liquidity between disconnected institutions. FedNow was supposed to fix payments, but it forgot one thing: settlement. Now they're turning to XRP to fill the gap, because Ripple, the company behind XRP, has already built that infrastructure. It's called on-demand liquidity, and it does what FedNow can't: move actual value between financial institutions without pre-funded accounts, correspondent banks, or time delays. And the Federal Reserve isn't building it from scratch. They're outsourcing it through private sector partners like Volante Technologies, which has already integrated XRP into its banking systems. Volante is no small startup. It powers payment rails for central banks and Tier 1 institutions in over 95 countries. And in 2023, Volante was quietly listed as a FedNow service provider, giving it a direct channel into the U.S. clearing system. Ripple plugs into Volante. Volante plugs into FedNow. No press release, no oversight, just a silent handoff and a new protocol running beneath the dollar. XRP is entering the bloodstream of the dollar, and the process has already started. Last quarter, Ripple quietly renewed its partnership with Bank of America, one of the largest Fed clearing institutions in the country. Insiders confirmed the collaboration focuses on using XRP to settle cross-border treasury flows, bypassing SWIFT entirely and using Ripple's liquidity hubs to move dollars, euros, and yen in seconds. That's not speculation. That's the second largest clearing bank in America quietly switching rails. One of the Federal Reserve's biggest clearing banks is feeding XRP settlement data directly into U.S. payment infrastructure, and no one told you. Not because it's a rumor, because it's too early to announce. Ripple is under NDAs with multiple banks and central entities. The media won't break the story until they're told it's safe. The signs are everywhere. 2 weeks ago, buried inside a Federal Reserve white paper, was a blueprint for dissolving traditional bank settlement entirely. It called for neutral digital liquidity assets capable of bridging fiat rails in real time with no dependency on sovereign currency. That's XRP. It's already wired into hundreds of institutions, and it settles fiat pairs in 5 seconds flat. In a separate roundtable, Fed Governor Michelle Bowman confirmed that non-sovereign liquidity rails are being explored for use in future cross-border and domestic transfers. She didn't say XRP, but she didn't have to, because when Ripple has partnerships with over 40 central banks, including full-blown CBDC pilots, the direction is obvious. And here's where things break wide open. As of today, the U.S. national debt has passed $35.9 trillion. The Treasury is auctioning off hundreds of billions in short-term debt just to keep the machine running. And every dollar of it flows through the same bottlenecked, outdated settlement system that breaks under pressure. Late wires, bank-run panic, liquidity gaps between institutions. That's why the Fed isn't just exploring new tools. It's already plugging them in. And XRP isn't just compatible. It was built for this. It's fast enough to outrun compliance, scalable enough to replace SWIFT, and invisible enough to stay unchallenged. And it doesn't require a single intermediary to move between jurisdictions. That's why RippleNet has become the default option for dozens of private banks. It solves real settlement issues today, and now it's solving them inside the Fed's own clearing framework. But here's what almost no one realizes. This whole process, from the Fed's policy shift to Ripple's legal clarity, has been timed perfectly. Because the SEC case wasn't about protecting investors. It was about stalling XRP long enough for the legal infrastructure to be built around it. They didn't fight Ripple to win. They fought to buy time while they rewired the system behind the scenes. And now that the ruling is final, the dam is breaking. U.S. banks can now legally use XRP. FedLink providers are already testing it. Global banks are routing treasury flows through it. And no one's making noise because the transition only works if the public is distracted. But they've already turned it on, and you're still waiting for an announcement. Let's bring it closer to home. Later this year, Ripple is expected to launch a US-based liquidity corridor, fully compliant, fully regulated, and plugged directly into FedNow pipelines through partners like Volante and BIF. And when that switch flips, XRP won't be a speculative asset anymore. It will be the plumbing, invisible, essential, and everywhere. Picture this. No banks, no fees, no risk. Just a $5 billion transfer settled in 3 seconds. And it all happens on XRP rails, while the press still calls it next-gen payment infrastructure. Because that's the real trick. They'll never call it XRP. They'll call it neutral liquidity, digital bridge tokens, interbank clearing layers. And make no mistake, this isn't just a tech upgrade. It's a financial coup. The same institutions that call crypto dangerous, speculative, even criminal, are now embedding its core technology into the next global settlement framework. But they won't call it crypto. Because if they did, they'd have to admit the system was broken and that an open source protocol outpaced the Fed by over a decade. Instead, they're co-opting the rails. They're using neutral language, sterile acronyms, and backdoor integrations to fold XRP into a system that still pretends to be sovereign. Because once XRP is inside, the surface optics don't matter. You can call it a bridge asset. You can label it a real-time liquidity layer. You can hide it under enterprise wrappers and white-labeled interfaces, but the engine underneath still runs on XRP. That's why global settlement times are shrinking from days to seconds. That's why foreign central banks are now coordinating with Ripple's engineers, not Swift's. And that's why every major financial institution is racing to plug in before it becomes mandatory infrastructure. We're witnessing a silent protocol shift, one that replaces layers of bureaucracy, friction, and control with a single programmable asset that never sleeps. And in 10 years, no one will remember how money used to move. They'll just know it's instant. And XRP will be the reason why. But if you look beneath the surface, it's the same technology, the same ledger, the same token. And by the time they admit it publicly, the integration will be complete. Now here's the final layer. The average investor is waiting for a price breakout. They're watching charts, setting alerts, chasing headlines. But the real power of XRP was never about price. It was about position. And right now, XRP is being positioned as the digital glue between sovereign money, private banking, and real-time commerce. That's not a prediction. That's a live event. And by the time it hits the front page, the door will be closed. Don't wait for the media to admit the truth. Well Signal breaks it before they're allowed to admit it. Subscribe now and see the financial world before the curtain drops.